this is Keith Brzee with Liberty Precious Metals, one of the partners. Welcome today. Welcome to the Liberty Post weekly update for the week of February 11th through February 15th. Before we get started with this week's updates, let's take a moment and look back at a few of the events in 2012. Gaza fired missiles on Jerusalem, causing heightened unrest in the Middle East. The director of the CIA, a man considered to be the highest moral integrity, resigned due to the improprieties and adultery. The UN ambassador was instructed by the White House to cover up what happened in Libya, attempting to minimize the deaths of 4 Americans who were murdered. There was an attempt to raise taxes during the worst economic times since the Great Depression. Hurricane Sandy, called the perfect storm, hit the East Coast, causing great devastation. Iran came closer to nuclear weapons. The use of marijuana was legalized in the state of Washington and Colorado. Some states legalized same-sex marriage. 23 states began a petition to secede from the nation. Russia strengthened its coalition with North Korea and Iran. Forces allied to stop prayer in school while allowing the handling of birth control. The government continued to use the use of tax dollars to fund abortions. Hollywood promoted parenthood without marriage. Examples of violence, gambling, drug misuse, and infidelity were more prevalent than ever, while education scores of our youth plummeted to the lowest levels ever. Finally, we were brought to the edge of the fiscal cliff. In our opinion, the first 30 to 45 days of 2013 have proven to be the same. Now let's take a look at this week ahead and some key events that have taken place this week that have had an effect on the overall economy and the precious metals market. First of all, let's take a look at the dollar. According to a CNBC article, expectations of the end to ultra-ease U.S. monetary policy likely to set in during the second half of 2013 could trigger a bull run in the dollar that could lead to a crisis in emerging markets as hot money inflows would unwind, according to independent economist Andy Exie. He argues the bull market tends to trigger crisis in emerging economies, citing the Latin American debt crisis in the 1980s and the Asian financial crisis in 1997. He goes on to state that during the last 10 years, dollar bear market, massive amounts of hot money have flowed into emerging economies, causing currency appreciation and asset bubbles. But when the dollar turns to a bull market, the liquidity will disappear and those economies will have a vicious downside. On another note, Bill Gross, the PIMCO bond guru, stated that a heavy reliance on credit has put the U.S. economy on a trajectory towards extinction. He warned of an investor exodus from the financial markets. The level of credit needed to spur economic growth has grown 5-fold since the 1980s. He likened the need for more and more government stimulus to produce ever-diminishing rates to growth to Japan's experience over the past decade. Gross said a breakdown in credit markets will likely spur inflation, something he has warned against previously. He again recommended investments in inflation-protected treasuries, gold, and other commodities. And on a financial note, were you aware that your bank can legally steal money from your private checking accounts? According to a recent federal court ruling, it appears that once a bank customer deposits their money into an account with the bank, the fund becomes the property of the bank. The customer and the point of deposit relinquishes all rights to the money regardless of any laws in place, legal assurances or guarantees, and this extends from investments to private checking accounts. The bank can use the funds as collateral to pay other debts or to place it on the stock market to bump up their trading ability with extra cash. In the event the customer allocated funds are lost, the bank does not owe the customer the money back. Essentially, once you have deposited money, it is gone. As many of you have probably noticed, when withdrawing cash from the ATM recently, the daily allotted amount has decreased, forcing you to go into the branch for your funds. Depending on the amount being requested, you may be forced to sit down with a manager and question as to why you want the money, why you are planning on what you are planning on purchasing, and why you are not using your debit card instead. These questions are not only intrusive, but they are illegal. Please take the time to review your finances and where they are being held. Contact us today for a free review and allow us to help you protect and preserve your financial wealth. This is Keith Brzee from Liberty Precious Metals. Have a great day.